So let's jump right in. We got the 20s.
Let's talk about this. This is where you build the base. Now, for most folks, the 20s is going to be an incredibly busy decade. You're going to spend your time becoming an expert at something. You want to make sure when you're in your 20s, you're becoming an expert in the right things, not becoming an expert in wasting time or wasting your resources.
This is also when I want you talked about kind of making sure your shovel's good with good income, but also let's get your basics working for you. If you can start taking a little bit of today for that great, big, beautiful tomorrow, you're going to be shocked that a little goes so far. It grows exponentially, so don't skip out on getting good habits going. You want good habits, make them as easy as possible. Bad habits as hard as possible.
All right, so let's think about how do we think through this. When it comes to your cash flow, when it comes to your spending, it's pretty simple what you need to focus on in your 20s. How can I structure my life in such a way that I spend less than I make? I mean, this is like personal finance, one-on-one, basic building block of finance. If I make X dollars, I need to spend less than X dollars on an ongoing basis.
Well, it's we talk about the 3 ingredients of wealth building, and discipline is the first thing. Yep. And I think it's 101 that, of course, spending less than you make ties into that whole component of deferred gratification and discipline.
The other thing you need to understand in your 20s is that debt is dangerous, Brian. You talk often about it being a chainsaw. What do you mean when you talk about the chainsaw?
Well, I mean, a lot of people, because it seems so easy. And we even, like in our content meeting this morning, Daniel was showing us this guy who specializes in getting people in all these cars that they have no business being in, where they have $1,600 a month car payments and other things. And I think it's so dangerous that with a sign of your signature, you can be locked in on education, on cars. There's so many decisions. It doesn't require a lot of due diligence, and that's very dangerous because if you're counting on making 10% for success in your portfolio, or 8 to 10%, and then you find out you're paying 25 to 30%, who do you think's getting rich in that scenario? It's not you. You're the sucker. So don't fall into the debt trap.
The other thing that you need to do in your 20s is make sure that you figure out how to live cheap. This is the one decade where you can get by making decisions that maybe you would not be able to make in your 30s, in your 40s, certainly not when there are other people depending on you. So figure out how you can live as lean as possible in this decade so that you can get your army of dollar bills working as quickly as possible so that hopefully you're building a great, big, beautiful tomorrow for yourself.
Well, I think about, because we had this whole conversation, is that in your 20s, you're trying to save, you're trying to invest, you're trying to get that foundation of your army of dollar bills building and growing upon themselves. But does that mean I don't want you doing anything? No, of course not. You're only going to be in your 20s once. So you need to make sure you maximize it. But you don't have to make it where it's Instagram fabulous. You can bedazzle your basic life. There's nothing wrong with taking time, travel, do fun things, but do it in a way that you're not forfeiting your ability to save and invest for the future.
I love it. And as we move on from cash flow and spending, now let's think about how we approach risk management. Now, the first one, this is great because this is where the financial order of operation starts. Step one, we want you to have your deductibles covered. No matter what comes your way, we want you to make sure that you have enough to be able to cover the deductibles that you carry on the insurance policies that you have in place. But most people, Brian, they don't do this.
Well, think about it. Every year we look for the bank rate data, and it comes out, you can pretty much set your clock to it. It's right around 60%. This year it came in at 56% of Americans have less than $1,000 in savings. Now you're saying, well, hey, wait a minute, $1,000, is that what I need for my emergency reserves or my first step of the financial order of operations?
Maybe.
No. Well, maybe. But I think that's why you have to do some homework. Go actually list out all of your insurance deductibles. Look at your health insurance, look at your renter's insurance policy, your homeowner's policy, look at your cars and vehicles, and then whatever the highest deductible is, that's the number you need to be. And likely it's going to be around probably your medical insurance. So if it's $1,500, if it's $3,000, make sure you have that highest deductible covered first.
If you're listening to this and say, hey, I don't have that problem, I don't have any deductibles, you have a problem. Because the other thing you need to do in your 20s is make sure that you have the appropriate types of insurance. Don't go out there and be naked and not have health insurance. You need to make sure that you're covered. Same thing, if you have an automobile, it's required by law that you have insurance to insure that. So make sure you have the appropriate coverages in place and make sure those coverages match your financial situation. Don't go sign up for the cheapest insurance possible because that has a $25,000 deductible if there's no way, there's no chance you'd ever be able to actually pay that deductible. Make sure you have insurance that is appropriate for where you are in your 20s.
And we've already talked about the highest deductible covered, but I do think I want you in your 20s working on getting to 3 to 6 months of cash reserves. The big part, the reason the financial order of operations has 2 steps that are cash related is that I don't want you making desperate decisions. Life is going to throw obstacles at you. Let's just make sure you have enough foundation underneath you so you don't have to go use credit card debt, payday loans, or any of the other desperate traps that will ruin your financial life.
Now, you may be asking, how do I decide if I need an emergency fund? Do I need the 3 months of expenses or do I need 6 months of expenses? Well, we actually have a great little deliverable out there on our Instagram. You can go check us out on Instagram at @MoneyGuyShow that actually walks you through the different things, 3 months versus 6 months. Do I have high job security or low job security? Am I a dual income household? Am I a single income household? Do I have a lot of fixed costs like mortgage or do I have a flexible lifestyle? All of these different metrics, all of these different things will inform, should I shoot for 3 months or should I shoot for 6 months? In your 20s, you ought to be thinking about your emergency fund. And while it may not be fully funded yet, it should be working towards being fully funded.
I wanted to talk about investing a little bit is something, because this is so important in your 20s because a little goes so far. Yep. And we even have a deliverable. So you go to moneyguy.com/
resources. Moneyguy.com/resources is where you can go find this deliverable.
I was about to say moneyguy.com/millionaire mission.
No, that's where your book is.
I know.
This is where the resources are.
Moneyguy.com/resources. I had to get, but definitely. Here's what's exciting about this is when you're 20 years old, every dollar has the potential to become $88.
It's huge.
When you're 30, every dollar has potential to become $23. When you're 40, every dollar has potential to become $7. Do you see how fast this changes? This is why if you're in your 20s, your money is exponentially more powerful. I know you don't have any money. You're broke, you're young, but that's okay because a little goes a long way. That's why use the power of time to maximize what your money can become.
Okay, Brian, I get it. I want to start investing. I love it. Okay, well, what stocks do I go buy? How do I do this? You don't have to overcomplicate it. One of the great things you can do in your 20s is you can use target retirement index funds where all you have to do is make 2 decisions. How much money can I save? What year do I think I'll need the money? If you can answer those 2 questions, you already can know what you can go out there and buy. And if you want to know more about investing and how to get started and what types of accounts and where to do it and how to do it, we have an entire episode out there, both on YouTube and in podcast form, The Beginner's Guide to Investing in 2024. If you've not checked that out, go check it out and start doing something today. Because just like Brian said, a little bit goes a long way.
Well, I mean, I hate to transition from something that has so much sizzle as investing and building your army of dollars, but it is important to talk about tax planning. and look, here's the reason is that if you're not being deliberate about your taxes, 2 big things to pay attention to when you start investing and letting your army grow is you got to pay attention to the fees you pay and the taxes you pay.
That's right.
And that's one of the big things is don't make this, the good news is in your 20s, it's not going to be super complicated. More than likely, it's going to be your W-2 income, or if you're self-employed, it's going to be running the Schedule C. But don't overcomplicate this, but use some resource, whether it's TurboTax or whether it's, taking advantage of VITA, because there's all kind of free resources, or maybe if you start having some success, reach out to a professional, but don't overlook the importance of doing your taxes.
Just make sure that you're actually doing it. Don't let this be something you ignore. When you get here, filing your taxes every year is important. It's not something you to miss out on. Another thing that is important to think about as you move along in your 20s is you're starting to think about, okay, if I am beginning to get married, if I am beginning to build wealth, if I am beginning to have children, do I need an estate plan in place? As you start to open your first investment accounts and you open your Roth IRA or you start participating in your 401k, you want to make sure that the beneficiaries are updated. When you first open them, maybe you set it up so it's a sibling or a parent. But as you start to have loved ones come into your life and as your life circumstances change, you want to make sure you do that, but you don't need something super complicated. It's okay at this stage, even if you have a back of the napkin estate plan. If something happens to me, this is basically where I want my stuff to go. This is who I want to take over the things that I am responsible for. I don't think it has to be incredibly complicated, but it should be something you're thinking about at least a little as you're in this decade.